Hi everyone, this is Michael Kramer of Ma Capital. Today is Tuesday, March 18th. It's around 5:30 p.m. New York time. Uh, the rest of the week gets sort of interesting from this point. We have a BOJ meeting occurring Wednesday morning in Japan. We have a Fed meeting occurring tomorrow afternoon and a BOE meeting later in the week on Thursday. And these things are all going to play, important roles in where FX goes and things of that nature. But at least from an economic standpoint, there's really not a whole heck of a lot of things going on this week after we get through all these central bank meetings. The biggest thing that I'm seeing on the calendar, at least for this week, is going to be the initial jobless claims data, which comes every Thursday morning, existing home sales, and then on the 24th, which is actually next week, we're going to get some PMI data. So there's really just not a lot going on here from an economic calendar standpoint, which means there will be a lot more focus on central bank policy and what comes out of that meeting. I thought I'd just start off with the euro as usual. Euro is now up to an important area, 109.5. This has clearly been a very key level of resistance. We've talked about this previously. When we look at the Bollinger Bands, clearly not in an overbought scenario like we were the last time. RSI, yes, it's still above 70, but remember, the way that I try to think about overbought and oversold conditions are having two criteria met. And what's worked for me really well in the past is on the RSI, having it above 70 and the price above the upper Bollinger Band on the upside, and in oversold conditions, RSI below 30 and price below the lower Bollinger Band. So in this case, we did have that condition towards the end of last week. Towards the middle of last week, it did give us a little bit of a pullback. It gave us a little bit of consolidation. And now we're looking at a potential situation here where the euro can really break out and potentially move even higher, with 111 really being potentially the next spot, which would be the upper Bollinger Band. But I think there's a chance here you could even target this 112 level, which is, this upper area. I'm not saying it's going to come there in a straight line. It's really going to depend on how the bands sort of evolve. Clearly, the next major level that I would be looking for is this upper Bollinger Band up here around the 111. Clearly, a failure to surpass this 109.5 area is going to set up, downside risk. I would think you should find some meaningful support around the 107.80 region. And then the 20-day moving average, which is going to be moving up towards that area as well, should also offer some support. Anything that really starts getting below this 107.5 region really opens the door to moving back towards 105.80. But given what we've been seeing in the market, my gut feeling is that we're likely to continue to see the euro strengthen in the days and weeks to come. When we look at the pound, a very similar type of setup last week. We were kind of just grinding along the upper Bollinger Band, just hitting above 70 on the RSI. We've kind of moved away from that condition, consolidating some around this resistance zone around 130. The next area that I would be targeting or thinking about is potentially moving up towards 131 or so. That seems to me to be the next major level of resistance from a technical standpoint, support resistance level, and also from a Bollinger Band standpoint. You can see the upper band there. Downside, I think, is probably around the 20-day moving average, lower support level. But overall, I think you're in a situation also where you could continue to see the pound strengthen. When we swing over to the yen, we obviously have the BOJ announcement. Again, they're not expected to do anything, but I would think that they're probably going to have some really strong communication in terms of signaling what's likely to happen next, what their next move should be. General consensus is that they're going to be raising rates again at some point later this year. So, I think, in the intermediate term, clearly here's your downtrend, here's your 20-day moving average. That's been serving as resistance. Your downtrend's been kind of going right along it. There's certainly some room for resistance around this 150-70 region, which would be the upper band, and also the support resistance level from over here in this one from back here in early mid-February, and even going back further to beginning of February. But in the meantime, depending, of course, how the Fed meeting is going to go, and depending, of course, what's said at the BOJ meeting, it's really going to be dependent upon how these communications go, because if the Fed is perceived as being more dovish, then that's likely going to lead to the yen continuing to strengthen. Additionally, when we look at the setups in the euro and the pound, you have to consider that the macro setup appears to favor the dollar weakening. And so I would think that the yen probably continues to trend lower, meaning it continues to strengthen versus the dollar. And the reason the area I would be looking for is probably back around this 146.5 area. It gets a little tight in here with the Bollinger Bands contracting, but there really is room to continue to move down because the RSI is all the way back up to 45. So there's plenty of room really to see the yen continue to strengthen in the days to come. Obviously, though, it's going to be policy dependent with upside risk, with yen weakening risks. When we swing over to gold, gold had this interesting breakout towards the end of last week. It was setting up what looked like could have been a reversal pattern, actually, with a diamond, but diamonds can serve also as continuation patterns at times, and it's really very difficult to tell which way it's going to break until it actually breaks. And so it did break higher, and if we kind of think about, what this pattern suggests in terms of where, gold could be going, what I generally do is I just try to take a measurement from the base of the diamond to the height of the diamond, and then I just measure it from the breakout area. And what this is suggesting is that you might be coming towards the upper end of the range, probably around 3,050. The other thing, obviously, is we have the conditions where gold is getting overbought here with an RSI above 70 and above the upper Bollinger Band. So this seems like a natural spot to see gold potentially consolidate and actually slow down here, maybe even pull back some to this 20-day moving average right around the 3,000 level. This is around the 29, 40, 30 region. And then, of course, we also have this horizontal support level at 29.50, which seems to be a natural place for gold to come back and retest the breakout if that's going to happen. But this looks like a region, though, around this 3,050 area to potentially serve as a really valid place to have some sideways or even a slight pullback in terms of consolidation, at least. When we look at oil, it really continues to just trend along this lower bottom line around $66. It's very clear that oil is being supported around the $65 to $66 region. That's really been the case for a very long time. There was a big seller in this region going all the way back, to 2018. So this is a big level, and it's really hard to say exactly when oil makes that break. But what seems clear is that if it's not going to go down, at some point it's going to go higher. And we keep getting these little pushes, and it's testing, getting up, it's trying to move higher, and then it breaks down again. Momentum is obviously not favorable, but you are seeing signs of potentially momentum changing. So I would just continue to watch the $65 to $66 region to see if there's any change there. As long as that level holds, I think you have to continue to favor the upside movement in oil prices. When we look at the DAX, it's really just kind of trading sideways now the last couple of weeks, at least since the beginning of March. We got to as round as high as 23,150, and today we're at 23,380, and kind of made this double top like looking pattern here with these breakout and another break, with a gap higher, gap lower, gap higher. Be interesting to see how this works out tomorrow. Clearly if you get another situation where we gap lower, then I would think you're probably indicating, a push back to this level at 22,260. If we don't get that gap lower, you can see we're already at the upper band, but the RSI could actually still continue to go up, and this Bollinger Band is going to continue to rise at least for a little bit longer. So there probably is some room to continue to rise along that band, maybe to around 23,500, 23,600. Obviously, people are very excited about what the stimulus spending that's going on in Europe right now and in Germany specifically. So there is potentially upside risk, but again, I think you just have to kind of play this one and see how it opens. If it opens weaker, I would think it probably means you're heading back down to the 22,260 region. And so the FTSE last week got, kind of oversold a little, came down below the lower band, kind of hit support around 84.70. We've seen it, bounce back now again. Again, the relationship with copper continues to hold. We've seen copper prices really move higher now the last couple of days, and it does look like copper can probably continue to move up. And my thought process would be is that if copper is going to continue to move up, then we should continue to see the FTSE move up. And I would continue to just lean on copper's direction to help you gauge that. I mean, obviously, it's not going to tell you the velocity or the strength of a move, but at least copper can maybe give you a hand in terms of direction. I mean, clearly here, copper was still rising a little bit, and you got a pullback in the FTSE, but copper also came back pretty sharply, very quickly as well, and the FTSE, decline really kept until you saw copper turn decisively higher, and that's really been the case now for some time. And so again, copper moving up, you got to think the FTSE moves up. When we move over to the NASDAQ, last time we spoke, we highlighted these key areas here around 19,900. We, clearly there was a gap lower here. We came back up to that region, and again, you can see the importance of it because we again tested it yesterday and we failed. And so again, this 19,900 area continues to be a very important area for the NASDAQ 100. If we're able to break above 19,100, I think it probably sets up a move to 20,200, maybe all the way back to 20,500. But anything else, if you break lower and you break this 19,300 area, in other words, you break this low, I think you're probably going to be looking at an 18.4 situation. I just don't really like the way the NASDAQ and the S&P have been working. When you look at it and you compare it with the dollar index, for the most part, you can make an argument that, the NASDAQ has been kind of just trading with the dollar. And if the dollar is going to continue to weaken based on some of these other technical factors we're looking at, then that would suggest to me that you're going to continue to see the NASDAQ weaken as well. In fact, when you look at the dollar really quickly, without diverging too much, you can see it has this very symmetrical type of pattern in it with, the move here, then we stop, and then we move here and we stop, and moved here. And it's like a very similar type of pattern coming down at very similar levels. If I were to project, it would kind of indicate maybe a move back down 100.4, and that would, translate to a NASDAQ moving lower. When we look at the S&P, also very similar. Right now, we're also going into OpX, and right now 5,600 is the big level that's kind of pinning the market, and that's why we're seeing it kind of gyrate around the 5,600 level the last couple of days. The big level of support in the NASDAQ and the S&P from a option standpoint comes right around 5,500, and the big area of resistance comes right around 5,700, which is exactly where we stopped yesterday. So it's quite possible we just ping pong between 55 and 5,700 at least through Friday. Again, if you're going to fail at 5,600, you got to look and think that there's a room to go down to 5,500, and there's probably room to go to 5,400. Likewise, I think it's probably a little bit tougher on the upside with resistance at 5,700 based on the option positioning. And then finally, when we look at the Dow, at least as of right now, again, here's our big level of support we've been highlighting. Again, when we look at it really closely, you can see the Dow basically gets back to resistance, fails, and moves lower. So, again, until you break above these resistance levels in all of these different indexes, here it's 41,800. Until you break above those levels in really meaningful ways, I think you got to continue to favor downside. I mean, you can see I have highlighted here a double top potential pattern with this being the neckline, and that's really calling for a move down to 38,400. So there's a lot of room to potentially go here if we see the Dow slip any further. Anyway, I hope you have a great rest of your week, and we'll see you again soon. Bye.